Look, real estate can be a poor investment, and here's why. I mean, there's many upsides to real estate, but real estate is not for some people, and investing in real estate is just not for some people. Take, for example, if you don't have the time, or if you don't have the knowledge, or if you don't want to take the time to learn, or if you just don't want to deal with people because it's like, I just don't have an interest in real estate. There's nothing wrong with that. I always tell people, look, do you, but most importantly, if you do have an interest in real estate, it could be a wonderful asset and a wonderful way to not only shelter income but to build income. So if you're not comfortable with it, then just don't do it. It's not a good investment for you. Real estate is also one of those things where you can't cash it out really quick. So it's not like a stock where you can just say, you know what, I want to sell it today and get my cash in the next 2 to 3 days. You can't really do that with real estate. You can in certain circumstances and situations, but for the most part, you're going to be fire selling the property, meaning selling it at a deeply discounted rate. And from there, you even still have the closing time, and that time frame, even if a cash purchase, will take oftentimes 4 to 5 days to a week to be able to pull title, deed, taxes, and all that stuff. And look, we've all heard the horror stories where people are like, look, I bought this property and I will never do that again, or I bought this property and it was horrible. And I joke with people and say, well, listen, when I walk into a property or whatever it may be and it smells really, really bad, I mean, that's the smell of money. And the reason being is because those are what I call the don't wanters. People don't want that real estate. They don't want that burden. They don't want the stress. They don't want the headache, because it's not just buying a piece of real estate and putting a tenant in it. And don't get me wrong, you can do that easily if you purchase a commercial dwelling and they're going to build out the property themselves, or if you purchase a property that's pretty much turnkey, like new construction or almost new construction, or a property that's just impeccable condition. But to be able to buy and flip and hold and resell and the BRR, just like they talk about. However, it is a lot to learn, and some people just don't want to learn that process. And there's nothing wrong with that. There's nothing wrong with that whatsoever. Once again, do you. However, the notion of buying and holding real estate can far outweigh any investments that you can make. And it's one of those things where stocks and bonds and mutual funds all seem easy because you don't have to fix it, you don't have to touch it, you don't have to hear people call you. But then again, people do the same thing with their 401ks and the Roth IRAs, and they don't know anything about money, anything about investing, anything about finance. And I'm like, regardless of where you're going to put your money, you need to know a little bit about where you're going to put your money, why you're putting your money there, how the system works, how the process works. And look, I get it. We all have agreed that they don't teach money in the school systems. They just teach you how to basically get a job. They don't teach you how to earn and make the money and actually do with that, other than invest in your 401k and hope that it doesn't hit rock bottom. But go with me here for just a second. There were a lot of people that purchased real estate before 2008, and that was the big housing crisis, right? Those people purchased real estate before 2008 that still kept that real estate. They've become extremely, extremely wealthy. There's people that have become multi-millionaires because they purchased property before 2008, but it doesn't stop there. There was a lot of people that purchased houses during 2008, 2009, and they have seen tremendous equity in their properties. But just think about this for a second. What if you purchase 2 pieces of real estate every year for the next 10 years of your life? And let's say you're starting right now and you're 25, 30, 35. It doesn't matter if you're 50. If you purchase 2 pieces of property for the next 10 years of your life, you will have 20 pieces of property. On the beginning day of the 11th year, take 5 of those properties and sell them. The equity that you have in those properties, meaning that what you bought them for, what you've paid the balance is down, and now what they're worth. You take the 5, that cash equity from 5 properties, and pay off the other 15. So if you sell off those 5 properties and pay off the other 15, now you have 15 properties earning you $1,500 a month. That's $22,500 a month. If you're 50 years old, when you're 60 years old, would $22,500 a month be pretty appealing? You bet your butt it would. And even more so if you're 30 or 40 and you get to start a little bit young. And then what if you had 40 properties? What if you've had 50 properties? That's why I say it's important to learn, because not only do you develop a means of which you can have cash coming in, you also have a means of which to offer housing for consumers. And look, I get it. With anything, you're going to learn the process. You have to want to learn the process, but if you don't want to learn the the process, that's quite all right. One good way to learn the process is to buy a duplex or buy a triplex or a quadruplex. If you've never owned or purchased a piece of property ever in your life, perhaps you may want to make your first investment your first home, or your first home your first investment. Here's what I mean by that. Through FHA, you can purchase a property. It can be a duplex, a triplex, or a quadruplex, meaning it's 4 units. As long as you live in one of those units that you own for a minimum of 1 year, after that 1 year, you can rent out every unit. Go with me here. You have a duplex. You and another side. You don't know anything about investment property, but you purchase a duplex. FHA allows you to purchase a duplex with 3.5% down payment. Seller can pay your closing costs. So for anywhere from, 3.5% on a $200,000 purchase, a $300,000 purchase, let's just say for argument's sake, $10,000 or $11,000. You have $10,000 or $11,000, you purchase a duplex. You can live in one side for a minimum of a year, rent out the other side. That tenant's pretty much going to pay. It's one of those things where even if you just start gradually doing it, you have to think ahead in time. It comes with time. It comes with when you've aged a little bit, you still feel really young at 50 years old. You've experienced so much more in life that you can share. And one piece of advice that I would advise anybody is don't put all your eggs in one basket. It's okay to have stocks and bonds and mutual funds and CDs if that's what you're comfortable with. But at the end of the day, I ask anyone, check it out. Dabble in real estate. Take your time. Learn a little bit. Buy 1 or 2 properties. A lot of people are like, there's no way I'd own another piece of rental property. I have people call me and go, Wayne, sell this thing. I don't want to deal with tenants anymore. And some people are like, I don't mind it. And some people, I tell them, look, hire a property manager for 10 to 15% of the gross rents. You can actually pay a company to manage your property, and they'll call you when there's something wrong. Other than that, they're collecting rent and depositing the money. But one way you can invest in real estate without physically having to deal with anyone is do what they call a real estate investment trust. And through real estate investment trust, you can actually purchase pieces of property, investing in real estate, and you never have to deal with anyone. And it's very much like investing in stocks or bonds or mutual funds. Plus, it's low cost, it's diversified, it can be liquidable, and it can pay you dividends. So the question is now a good time to buy real estate? If you're watching this video right now, it's an excellent time to buy real estate. Regardless of who you are, if you look back over the track record and literally the history of real estate, you will see if it was 30 years ago or 40 years ago or 50 years ago, it has increased in value. Real estate has increased in value. Listen, it's really simple. I'll tell people buy greenhouses and red hotels, just like the game Monopoly. When you purchase investment property, you want to purchase that investment property for the long haul. It's one of those things when you purchase it, you don't want to dump it when the going gets rough. The entry level to real estate, typically if you're going to do investment property, you're going to need 10% to put down. But you can do other things to purchase investment property, like purchasing the property, making the improvements. You can borrow money to make a purchase on a property and the improvements through hard money lenders. And if you purchase a piece of property, for example, and you want to flip that property, or let's just say you want to hold that property, you can borrow money at 10, 12, 15% interest, but it's not over the long haul. If you only have to pay 10, 12, 15% interest over 3 months, but it affords you the availability of that money, then that's a win-win. You take that property, you make the improvement on the property. Once the property's improved, you can put a tenant in the property, turn around and get the property refinanced through traditional financing on a 30-year fixed term or a 15-year fixed term at a fixed rate that's never going to go up, and then you put a tenant in that property. What's really cool is once you get a mortgage on that property, if you bought the property for $70,000 and then you've made $20,000 worth of improvements and the house is worth $110,000, you can see how you can literally refinance that property, pay off the hard money lender, put money back in your pocket, and you basically just bought a house for no money out of pocket. Zero down because you got reimbursed for your time, for your money, and the money that you borrowed. But the facts are this: real estate is not for everybody. Can you build wealth in real estate? Absolutely. Real estate's one of those things where you can build wealth while you're doing it, whether you're building, remodeling, flipping, buying, holding, whether you have a full-time job and you're just purchasing 1 or 2 or 3 properties per year. It can build wealth. It can also, if you have wealth from a business entity, or let's just say your profession, you want to purchase real estate, it's a great tax shelter because it allows you to shelter money from the IRS through depreciation of the property that's legally done. That's the way the laws are written. And when you depreciate the property and when you go to sell the property, you can do 1031 tax deferred exchange. And I know it's a lot to learn, but I just tell everyone, give it a chance, look into it, watch videos, educate yourself. I promise you, you will not regret it. And don't just take my word for it. Talk to your uncle and your aunt, talk to your grandparents, ask them what they paid for their property, ask Ask them what they purchased their property for. Join local real estate investor associations. There's one in almost every single county, parish, city across the United States. Learn from others. Ask the questions. Would you do it again? What would you do different? And you'll find that so many people are so very helpful when it comes to anything in life if you just ask, whether it be real estate or anything you need to know. Always ask the question, and most importantly, have fun learning.